Global stocks in a 360-degree U-turn, oil dropping 17% in one day. Is it over? Are we out of the woods completely? Hmm, that's a great question. Let's get into it. Okay, Clifford, the 25-year trader, back with another midweek futures market update. And all I can say is, what a difference a day makes. Anyone remember that song from the 50s or 60s? I'm sorry, I have to laugh because what a difference a day makes. This is insane. I mean, just last Sunday on my YouTube channel, I was mentioning that, stocks are in a downtrend. And as a trend trader, I look basically to trade the trend. So if we're in a downtrend, I'm a seller. If we're in an uptrend, I like to be a buyer. Um, and then we had this kind of like short covering rally right here, kind of like a relief rally. And then I saw this hesitation right here. I'm like, okay, this is the perfect time to take another small short position, which I did. And all of a sudden, 2 days later, boom, peace treaties, the war might be ending, everything, the script completely flipped, right? And that just goes to show you, always expect the unexpected in trading. Use your risk management because you just never know what's going to happen in your trade, in the world, in the geopolitical environment you're in. So yeah, that's basically what I wanted to say about that. So where on earth are we now? Okay, all right, a new day, new trades, right? Let's see. And by the way, trading during a war, I mean, there's difficult environments to trade in, but this is probably the most difficult environment you could ever possibly try to trade in because it's so fluid, it's so, all over the place, like, and it's difficult at best. So you must, and I repeat, make sure you're using risk management 100%. I'm going to sound like a broken record again, but that's the biggest advice I could give in my 25 years of being in this business, experiencing the things that I've seen. Okay, so I am a technical, I believe in technical analysis. I'm a technical analyst, so I'm looking at the technical strongly here. Let's see what happened. So the relief rally has taken us up here today. I believe now that stocks are turning bullish. It's funny because last week I was bearish, but this week I'm bullish. And by the way, if you're bearish, being bearish, the stock market is probably the worst position you could be historically. The odds are against you. However, there are a few times that you can sometimes tilt the odds in your favor, like September, for example. That's usually the best time to be bearish, as well as February as well. But usually March and April, you want to be bullish because seasonally the stock market normally bottoms this time of year. But in a war, it's a different situation. So that was the only reason I considered taking a small short position last week. And I kind of like broke even on it. In the future, I'm trying to figure out how to actually show you guys some trades in these videos that I take in the future, so you could kind of follow along with them. I'm still studying the system here to do that. I think I could use the paper trading system to kind of show it happening live, maybe. So I'll definitely work on that in the future. But okay, so are we back to buy the dip? I think we are. I mean, at least for the next 2 weeks, right? I mean, things are changing so fast here. It's like, you wake up the next day, you don't know what to expect in the market, right? So, if you're trying the trade and you're looking for the profit opportunity, then, you want to try and find the trend. Although in this market, it's kind of hard to find the trend right now because of so much volatility. But if you look at the technicals, which is what I like to watch, I can see here that there's a break above resistance. And me as a technical analyst, I have two rules. If the market breaks resistance, then that tells me it's probably going that the probabilities are that it's going to move higher. If the market breaks support, the probability is that it's going to move lower. I don't use indicators. I don't need them ever again. Got nothing against them, but they never really helped me. They used to lag a lot and just cause me a lot of confusion. I'll make another video in the future why I no longer use them. I just look at price action, and I think that that is the best way to trade. In the 25 years I've tried all the different systems out for me, anyways. So where are we by the dip? Yes, I believe so, because look at the VIX. The VIX here was at 30, and now we've dropped back to 22. And for those who are new to trading, the VIX is the fear index, kind of like the volatility index. See here in 2000, in April 2025, look at that spike in the VIX. Anyone remember what that was? Liberation Day, right? That was that huge spike, I believe, right? The Liberation Day thing. Um, and again, these spikes also happened. What was the other one? 2008. That was 2020 COVID. That was a big spike. 2008 global financial crisis, very big spike. But basically, if you're under 20, you're kind of like in a neutral zone. The fear is kind of like deflated from the market, right? If you're at 15, there's basically zero volatility in the market. Once you get above 30, then fear starts to really rise and panic sets in. So, but at 22 now, this is basically kind of like low fear index right now. What do we have for the rest of the week, real quick? So today they talked about the meeting. I believe they came out a little more hawkish. Actually, I read something that they are now considering more people, more of the members on the Fed, they're considering raising interest rates possibly this year. So I think the cuts might be off the table. Tomorrow we have the PCE. That's going to be big at 8:30. You definitely want to watch that. GDP, Canadian dollar at the end of the week, and of course the CPI. That's the big one for Friday. So definitely keep an eye on that. But as far as trading goes this week, for the end of this week, I would consider buying the S&P. Now, again, remember, I trade this is, if you're a futures trader, you want to be careful where you buy. If you're trading futures, be careful where you buy, because here's the reason. If you buy right here, this is the worst place to buy right now, because you're buying the rally. You're chasing the market by buying here. Now, I don't know how tight your stop is, but all I know is if I bought here right now and the market tomorrow dropped, 60 points, I just basically wasted my time buying at the high because now my position is down, right? So the best place to buy is at support. So you got to find support. Where is it? I think it's about, I mean, if you look at this big rally candle right here, check the open, check the high, check the low, right? The low was 66.52. The high is 68.47. So maybe find support about at the bottom of this candle right here, 66.56. So for me, I would probably buy in here at about 66.86, put a stop loss underneath that low, maybe risk 50, 60 points, and then, you know, I'm targeting the highs, right? I'm going for 2, 3 to 1, whatever it is for my profit target, right? So that's one thing you could do to trade this right now if you're bullish. If you're bearish, I mean, I don't see why you would be bearish right now, but if you are, I mean, I would say wait for a break below 66.39. And another thing, when you're trading support and resistance, it's very important to watch the daily close, because if the market just, tests this level at 60, let's say today the market tested this resistance here at 67.50, but then it reversed, then this whole day means nothing because it's not bullish, because it couldn't get above resistance, which is here at 67.50, right? But when you close above resistance, that signifies dynamic shift in the market. So what I like to do is I don't care about the open, and I don't care about the high and the low during the day. What I like to watch is the close. Like you see here, the reason I went bearish is because we had a close below these support levels here. Now I'm turning bullish because we have a close above this resistance level here. Um, And the same thing on the NASDAQ. See that resistance right there? Boom. That was a significant level, 24,769. Closes above, I will buy the dip because again, the the um, the probability trading is all about putting the probabilities in your favor. The probability is that the market wants to move higher because it closed above resistance. It didn't. When the market approaches resistance or support, three things can happen. It could pause, it could reverse, or it could smash right through. It smashed right through. That's bullish. So, in my opinion, it's a buy. It's a buy right now on a dip. Where you decide to take that dip is entirely up to you, but that's what I feel for the rest of the week. If I don't get the pullback, then okay, well, you know what? I'm not going to chase the market higher. I'm waiting for it to come back to me. So if I don't get the pullback, let it rally. Eventually, it'll pull back to a support level, and that's where I'm going to buy because that's how my discipline works. I believe you want to be a buyer at support and a seller at resistance. And in the 25 years of trading and studying this, to me, I think those are the best ways you can do it. So as far as oil goes, I mean, it's still technically bullish. We're still in an uptrend, but you know, I'm kind of like wait and see with the oil market right now. But here again, but see here again, support, right? We were just talking about support and resistance. Look at that. So here is the support level on the daily chart. The daily chart support on the crude oil futures contract is right here, 91.78. See how it tested support and it bounced off it. That's a sign that support is holding. That's why you want to watch the close. If it closed below the support level, then I would say we're pretty bearish now on oil. But pullbacks in an uptrend are normal. I mean, obviously, the oil market itself, I believe, is actually in a supply glut from what I've read over the last 3 to 6 months. And a lot of analysts feel that the market's oversupplied. The only reason all this is happening is because of the war and the whole thing with the Strait of Hormuz. That's the reason oil demand has jumped through the stratosphere like this. Um, but me personally, I'll be watching this between now and the end of the week, but I don't. It still looks bullish at the moment, but we got to really close above 113, this level here. See that? See, then again, there we go again. Support and resistance. That's what I'm saying. See the support resistance right here, 113. Now look what it did. Market could do three things: test, pause, reverse. Test, pause, pause, reverse, and now it reversed. It couldn't get above this resistance level. In order for the uptrend to continue, it's got to break and close above 113. That's the level you really want to be watching. Um, but if someone were to buy the dip at support here at 90, they could technically speaking put a risk stop down here at like maybe 82 and keep their risk management in check. They'd probably be okay on that. But if you're bearish oil, I would say wait for the break below support before considering a sell into resistance. So that's about it for the video. If you like the video, feel free to like, subscribe, put your comments below. Look forward to seeing everyone in the next one. And let's see. It's been a crazy week. I don't know what to expect between now and Friday, but it's gonna be pretty crazy, I'm sure. So and guys, remember, always use risk management. Never risk more than 1 to 2% of your account on any given trade, whether it's your private account or a prop firm you're trading. And once again, that is the best way to go for your long-term trading success. Good luck, guys. Be careful.